Welcome to Building the Future, hosted by Kevin Horick. With millions of listeners a month, Building the Future has quickly become one of the fastest rising programs, with a focus on interviewing startups, entrepreneurs, investors, CEOs, and more. The radio and TV show airs in 15 markets across the globe, including Silicon Valley. For full showtimes, past episodes, or to sponsor the show, please visit buildingthefutureshow.com.
Welcome back to the show. Today we have James Green. He's a general partner at CRV. James, welcome to the show.
Good morning. How you doing?
Very well. Yourself?
I am doing great. It is a lovely day here in the Bay Area, so I have
That's
nothing to
awesome.
complain about.
Very cool, man. Well, I'm excited to have you on the show. You've done a ton of really interesting stuff, but maybe before we get into all that, let's get to know you a little bit better and start off with where you grew up.
Great. Yeah, I grew up a little bit south of actually where Peaky Blinders is set.
Oh, cool. Very
Yeah,
cool.
so it's that's somewhat how I describe it to people, which has been really helpful because otherwise everyone thinks England is just London.
Right.
And so, if you were to ever meet my family, they sound, and maybe that's someone I listen to it, they sound exactly like Peaky Blinders does. And my fiance needs somewhat of a translator with them. But yeah, it's near Birmingham, middle of England, and moved out to the States about 10 years ago now, which is why
Oh,
my accent's all sorts of funny.
very cool. So you went to university. What did you take and why?
Uh, I did go to university. I did evolutionary psychology and cognitive neuroscience.
Okay. What got you
Um,
passionate about that?
it's a little bit of a sad story, but my grandma when I was growing up got CJD, which is mad cow disease.
Oh, sorry to hear
And
that.
so you learn a lot about people and the brain and things along those lines. So I was very heavy in neurobiology, and then ultimately went into some like human behavior, and then uh, yeah, long story short, found my way into tech. Um, so I studied that, which was a fascinating experience. But I can't say I do a lot of neurobiology these days.
What do you mean? Dealing with tech entrepreneurs isn't
You know, I can't tell you how many models of brain behavior I've built over the years, and I'm definitely not doing that now.
Fair enough. So I'm curious, you got into rowing really early on, and I think obviously it's different, but I think there's a lot of takeaways from that and relying on people that you either can I maybe give advice to teams, or you working with other people and just being in sync with each other, because I've never actually done it, but from what I understand, you have to be basically doing the exact same thing at the exact time, or it's just a complete disaster. Is that correct?
That is correct. If you're not in time, you usually will end up in the water somehow.
Okay.
But there's a couple of things that are pretty interesting about it, in that it's both a really big team sport in that you're only as fast as your slowest person. In
Got
that
it.
with 8 guys or 9 because someone's steering, and you know, you are only as fast as the team. Um, but it's also kind of a really stupid sport in all the best
Okay.
ways. And
Okay.
this is someone who did it for the best part of 10 years. So it is. I'm sure most of your listeners and you have at some point been on a rowing machine. It's very hard and you go very slowly backwards.
Right.
And so
Okay.
uh, it and so what it is an instrument of just work, candidly.
Sure.
The act of actually rowing, i.e., not falling in the water, putting your oar in the water, and pulling very hard, is not actually that difficult. Yes, you do need to be in time. Yes, teamwork really matters, and that is a fundamental exercise that you have to intuitively trust that people are going to work with you together. But it's also just a function of work ethic. There's a whatever the R rating is, but there's a huge correlation between work ethic and going fast. And
Right.
I kind of associate that with a lot of what I do today and some of the founders I work with. Like, if you think of a bell curve of distribution of intelligence, 90% of the world sits in the middle of the bell curve. Like, people are very intelligent, very eloquent, they can communicate, and there are some people who are crazy, crazy smart, who are I would never be able to keep up with, and there are some people who score below the average on the standardized testing.
Right.
But what differentiates between uh, a lot of people and going back to the rowing is like the work ethic and the teamwork. Like, can you communicate well? Can you trust people to do what they say they're going to do when they say they're going to do it? And at the end of the day, can you work harder than the other people? In today's technology market, you can basically start a company easier, faster than basically ever before. You
Sure.
get set up on Stripe Atlas, you go on AWS, then you get a bunch of open source stuff, you do your expenses on various stacks, and off you go. And so a lot of it is, how do you differentiate from work ethic? How do you differentiate from the team? And so there's a lot from rowing that I still take today, but the act of actually putting an oar in the water is not one of them.
Interesting. No, fair enough. Okay. So walk us through your career, maybe some highlights along the way up until coming to CRV, and then we'll dive into that.
Yeah, my first stint in technology was at a consumer internet company called CarWow in
Okay.
2015, I want to say. It might have even been earlier, that might have been 2013.
Sure.
Um, and I had no skills, like actually zero
Okay.
skills. Um,
Okay.
I, you
Why do you
know,
say that?
Because I was young and I was modeling brain brain behavior, and so
Okay.
it's not exactly like I knew how to create a marketing funnel or customer acquisition funnel, or did I know how to score leads, or even I could code, but not to the level of doing it as a day job. And I was young; I had very little experience, and
Okay.
so what I did was I went on the internet and I Googled, and this was back when I was thinking about living in the UK, and for various reasons, but I Googled top 100 startups in England,
Okay.
uh, and emailed the CEO of every single one of them. I went down the list, and I think I probably sent the same thing to everybody because I was young, dumb, and stupid. And I said, look, this is who I am. I'll basically work for anything and just come and let me work for you. So I ended up working at this company called Carwell, which at the time was based out of a seed funds VC office back when everyone was actually in offices, um, and was doing all sorts of stuff, from thinking about lead scoring, talking to customers, all these sorts of things. So that was
Okay.
my first foray into technology.
And that
Um,
came from one of those emails. Sorry to cut you off.
Cold emails, yeah.
Okay.
Uh,
Okay.
so I probably sent I actually I know it. I emailed all of them. So and at some point I can probably find the Google sheet with all the email name where I was in the funnel kind of process. Emailed all of them. I probably got a quarter of responses, and half of them
Right.
were like, "Who is this kid? Please leave me alone." Um, and and some responded, and I worked for pennies. Like one of my best friends at the time was living in London, and I slept on his sofa. Um, and so that was my first foray into tech. And just because James Hines, who's the CEO of Carwow, said, "Sure, that sounds great. Come work with us." So
That's amazing, though. Okay. So keep
yeah,
going on your journey.
yeah. So I did that. And then at the end of my stint there, I said, I still don't really know anything. So uh, maybe I should speak to 10,000 software companies and just figure out what's good, what's bad, just speak to as many as humanly possible. And there had to be a better way than emailing them from my personal email saying, please speak to me.
Okay.
Um, and so uh, I figured investing would be a good way to do it. I did basically the same thing and emailed a bunch of VCs and a bunch of different investment firms and said, "Look, I don't really know what I'm doing, but would love to learn." Um, and I also at the time uh, had negative dollars to my name with student
Mhm.
debt, and come from the middle of nowhere, England, where didn't have a lot of money, and wanted just to make some money for me and my family, and so um, went into investing for lots of reasons. It's one of the best things I've ever done. Uh, but went in and got my first ever job at a firm called Insight, where I spent the better part of 5 years. And That's where I started my career.
Interesting. Okay. So what made you come to CRV, and then let's dive into that.
Yeah. So I spent a long time in Insight and had heard of CRV. It's
Right.
a storied firm. It's been around 52 years, multiple firms, multiple category changing companies and foundational businesses at a global scale.
Right.
And also had gone through multiple transitions. It's one of the very few firms that is equal. You think about equal partners, equal decision making, and USV, Benchmark, and Arson. There were a couple of others, but those are the kind of the big ones. And so that was fascinating. And I'd known the team for a little while, and um, I really wanted a change to go earlier, to go closer to the genesis of companies, to spend time in a different culture, and so that really catalyzed it. But I was very happy with what I was doing at Insight, but the pitch and the pull from the partners here was so compelling um, that I joined just over a year ago, I guess now, and it's been a pretty amazing ride. Even with the seesawing and ups and downs of the public markets, private markets, the rise and fall and rise again of crypto. It's been a very interesting time to be in the world of venture.
Okay. Interesting. So let's dive into what types of stuff do you invest in at CRV, and then maybe let's dive into some of the companies.
Yeah, let's do it. So I think maybe there's three layers to that. There's what we do as a firm. There's what I do personally, and then kind of some of the stuff I've done.
Okay.
I think as a firm, one of our favorite questions is, can this be a foundational company? And, that is a qualitative and quantitative question. And quantitative is somewhat simple, is like, can it have enough revenue to support a public company? And qualitative is like, what does the world need to look like for this to be a public company? Going back to the early days of DoorDash, like what had to happen for that to be a public company to do billions in revenue?
Right.
And I don't think anyone would have said a global pandemic because that wasn't
Sure.
quite on everyone's radar back then.
Sure.
But obviously that was a huge catalyst for all the online food delivery companies and many others. Um, but we really invest at the earliest stages. We'll invest pre-launch, even some cases pre-idea for founders we've known for a long time, all the way to kind of Series Bs, which are hyper growth companies still trying to figure some of their things out. But what we think is on a massive value creation path to be, a 10, 20, $30 billion plus company. Um, and we pretty much do every category, at least in software and internet. The advantages and I guess disadvantages in some cases of being around 52 years is what it means is you just basically started investing in semiconductors. You were in
Right.
semiconductors, then you were kind of in box software, then eventually this thing called the cloud happened, and now we have uh, crypto, and then we have the whole world and the proliferation of technology. And ultimately, the difference is just the technology stack. We're still looking for businesses that have huge accretion of value, very foundational, had massive value to whoever the end customer is, business or consumer alike. And that's kind of where we come in. I spend personally most of my time on kind of financial technology and then infrastructure and developer tools.
Okay.
And I do that because of basically two reasons. On the financial technology side, uh, if you go and look around the world and look at legacy financial institutions, and you don't really need to be a finance major or an investment banker to see this, like they're very profitable businesses. And typically, businesses that are giant and very profitable are not good businesses for the consumers or for the businesses they serve because they have huge product profit margins and they're massive businesses, so have lots of different product lines and ultimately get fat, lazy, and slow. And so if you look at the world, and for your US listeners, the JP Morgans, the Wells Fargo's, all these people are classic examples. But in LATAM, you have businesses similarly in Brazil, in Mexico, and the same as Europe, and you pick a country. And so the VCs 10 years ago used to look at Oracle's product lines and say, okay, how do we replace Oracle's product lines? Because it's the same thing.
Interesting.
We really are no difference now, but just I'm picking a bigger, slower moving, more profitable company. And so we're spending a lot of time in financial technology broadly. We've made a number of investments. Probably maybe the most public facing in the US, the business called Mercury that my partner Sar led. And then in LATAM, where we're spending a lot of time for all the reasons we just mentioned, um, we led the Series B of Jeeves, which recently announced a Series C. And that is just kind of on the same thesis. The legacy financial institutions are insufficiently serving customers, and there has to be a better way. Kind of layering on software. So that's kind of us, and I guess where I'm spending my time. Um, the there are so many different founders I could talk about, but the obvious one is Cheese, as I mentioned, just given the recent fundraising announcement, and yeah, Dilip has been a phenomenal partner to work with. And that's the use of vernacular and the use of language is something we think about a lot at CRV. How can we deliver it with your words? And we don't invest in people; we work with people. We're trying to build foundational companies, and that's extremely important to us. And so, the the number of companies, people that Jeeves has had an impact on since we made the investments is counting the thousands,
Okay.
and maybe even tens of thousands. And so that's why the business is growing so quickly, and it's one of the fastest growing businesses we've seen, um, and why it's having such a big impact, and and why it garnered more investor attention for the Series C. But it's been an amazing story to be part of, and it's one that I think, yeah, I've been guilty of it, but I'm going to do it anyway because even though I dislike it, it really does feel like very, very early days for this business.
Okay.
And you know, it's already in tens of countries with multiple products, hundreds of employees, real fast growing, scaling revenue. And so there's there's a lot to go do, but I really think this could be one of those foundational companies.
No, very cool. So for people that have never heard of them, what do they do just for some context?
Yeah, and that is totally on me.
No, it's all good.
The uh, if you think about as a business, if you ever if you work at a business, you have a expense card, and so you go, you buy a cup of coffee, you buy lunch with a client, whatever you do. So this business provides the credit and the credit card to go do that, but does it in a cross-border fashion,
Ah,
i.e., we at CRV have employees in 10 countries. We have 10 different currencies, 10 different expense systems, and it provides that all in one single system. And so, as the world went remote in the last couple of years and it continues to be distributed today, this problem is kind of accelerating in an exponential fashion. Um, and the classic example is companies in Mexico City, where the company is founded, have to do a personal liability line to get a credit card for a business. You can raise tens, 20s, millions of venture funding, and a traditional bank won't give you a credit card for your business,
Wow,
which is
fascinating.
completely crazy, like
Totally.
absolutely insane.
Well, they give
Uh,
them free to people that don't have jobs in North America or other
it's
parts of North America.
oh, it's absolutely insane.
Yeah,
Um, and not only do
fascinating.
they do it's so difficult to get one. Uh, I would encourage your listeners to Google the average interest rates of Latin American credit cards.
Wow.
It is, for lack of a better term, predatory. And
Okay.
so this company is solving so many issues. The better technology on the back end, so easier to run your company, ease and access to capital, allows you to hire people in different countries a lot easier. It really is on lots of different kind of big macro waves, and the the team is executing phenomenally against it.
No, that's very cool. Do you want to maybe cover one or two more other investments that you've done recently?
Yeah, sure. We also made a investment in a business called Release,
Okay.
which uh, is more on the developer tool side, it's the other side of the house where I spend my time. This is founded by a team who used to be the senior executives at a business called TrueCar,
Oh yeah, sure.
um, which ironically, going very full circle, is what the business CarWow was based on, which was my first ever job.
Oh,
Um,
interesting.
and so, going full circle, the and what it does is it really empowers developers.
Okay.
So we think about empowering people, empowering companies, and this is focused on developers and allows them to spin up development environments very, very easily in almost any scenario at any time instantly, which
Wow.
before would have taken hours of work, lots of dependencies, lots of people, and I can basically allow anyone to spin up a development environment. Yeah, someone like me who I would describe as past technical in that I haven't actively coded in a decade, it can spin up an environment today.
Does it
Uh,
matter on language? Sorry to cut you off.
it can be it's many different languages
Okay.
and lots of different types of clouds as well. So it's really very extensive.
Got it.
Um, and it allows you to kind of spin those up and in lots of different ways. And so uh, that this is a classic example of empowering people, an amazing team who are really trying to build a business that makes a huge difference in businesses' lives. So that was a business we invested in last year, where we led the Series A, and uh, it again is another one where continue to out execute everything they said they would, and yeah, work harder than basically anyone I know. They your listeners want to go on the website, they are very family oriented people, and they're a remote culture, and yeah, now can actually spend time with all their kids, which they have on their pictures on their website. So it's a lovely little thing that they've got going.
Very cool. And one more?
Sure. We invested in a business called Recapped,
Okay. Sure.
which what this business does is allows salespeople to collaborate actively with their customers. So if you're selling a piece of software today, maybe you're selling Release, and you're selling it to the development team, except they need to get sign off from the CFO, they need to get sign off from legal, maybe they have compliance, or maybe they have a couple of other different stakeholders. In the past, that would be done through email. Hey, James, in compliance, I need you to sign off on this. And it's just an email that gets lost into the ether.
Yeah.
This is a revenue collaboration platform that allows people to collaborate in lots of different fashions, um, and really close deals faster. So basically, what it allows is perfect handoff between the sales teams who are selling the software to whoever is, then to the customer success team and all the other respective stakeholders in a sales process. We to go the gambit of having led B's, A's, and now seeds. We led the seed relatively early when I got to CRV, so it's probably almost a year ago. And they have customers like Pendo and Comply Advantage and
Oh,
a
cool.
number of other large enterprises using the platform to kind of empower and service their, in this case, sales teams. And in this case, this business is based in New York, and we're pretty agnostic with where founders are based. I would say uh, still the majority of our investments are in the broader Bay Area, but we're focusing. I'm personally focusing a lot on LATAM, and we've made investments remotely, New York, Oslo. You pick a place. We've probably made an investment.
Very cool. So this is I know this is probably like a really general question related to kind of who you're dealing with and company and how their history is a little bit, but you mentioned earlier that you guys will invest obviously if you've known the founder for a while and they're working maybe on a new idea or when nothing's been built or obviously at later stages when something's built. But where or what advice would you give entrepreneurs, because I know, like, forget bootstrapping, but they know they need to raise money for whatever reason. Do you think it's better to have kind of an MVP or a prototype or nothing or have some revenue? Or what advice do you give to people to when they should potentially raise money? Because as a founder and somebody that's done it before, it's very, very challenging to know when to actually do that. And I'm always curious to get investors' advice and thoughts on that.
Yeah, this is a great question. So I've invested in businesses that have bootstrapped to tens of millions of revenue, and I've invested in businesses that, like I said, are at PowerPoint stage. I
Right.
would say the point of which people should raise money is when they think it can be really big. This not,
Okay.
and it's not a bad thing to start a company that is not going to be listed on the Nasdaq. And it's not a bad thing if you think it can be listed on the Nasdaq and you eventually don't get there. Like that happens.
Right.
But if you fundamentally believe that you want to try and you think it can be a foundational company, that's when people should try and raise money.
Okay.
Um, I see people at the seed stage raising large seed rounds on kind of an intuition that they want to be a big company, but they're really just raising money and don't quite have the long term legs or vision or thoughts about what they're trying to do, and end up working for multiple years. The business sells and they don't make really any money or kind of have a life changing exit. Whereas if you bootstrapped a business that you ultimately decide, okay, we're not going to be a foundational company, you sell for $5 million. That's a life changing amount of money for you and your co-founders and the employees.
Right.
Um, and so the uh, the question I always ask people is like, why are you doing this? Like, what's the motivation? What do you want to be? What do you think this can be? And if the answer is, I really think this can be a public company, um, and you have to say it with conviction and believe it. But if you really do believe that it can be a public company for X, Y, and Z reason, like that's when you should raise money because that's why you can get off the ground. That's when you get the help. That's when you get everything that comes with venture capital. But you should believe that, at least in yourself.
No, I actually think that's really good advice and an interesting way of putting it because you're right. Like if you bootstrap a company, you sell for $5 million, like, yeah, that's awesome. But if you raise $10 million and sell for five, like it sucks, right?
Yeah, you're out of
Yeah.
luck.
Yeah. It
Um, and it's terrible, and I
yeah.
see it a lot. There's it kind of depends on when this gets aired, but there's a lot of recent stuff in the news of raising a lot of money and it not working out, and it's really tough, and it's mostly tough for the employees because there may be founders have taken secondary or whatever it is, but it's really sad for all the people involved when that happens, and you know, venture capital is not right for everybody. It's right for some people, and I really we think about this every day. Is like, can this be a foundational company? How can we help you? What do we do? How can we be involved? Where we can we push? Where can we get out of the way? But you know, if you start your own company and don't raise money and sell it for $5-10 million, like you're really set. So
Yeah.
I always ask people like, is this the right thing for you and your company? So
Okay. No, I think that makes total sense. So, but okay, so if hypothetically, if I'm pitching you and you ask me that question, how do you or what do you look for in my answer that can convince you that yes, I actually want to take my company public and that I actually am in it for the long haul? Because I find sometimes so many people think that they're going to start a company, they're going to sell for tens of millions, if not more, and they're going to be rich in, a couple of years. And you and I both know that's never the case, but how do you kind of weed that out? Or is there any advice you give to people to actually prove that they've either done this before or are willing to grind it out for, 3, 5, 10+ years sometimes?
yeah, the fundamental understanding of what taking venture capital means is the start of it, right? Like
Okay.
it's okay, this is a journey. This is what a cap table is. This is what a preference stack is. Like, do you understand what this means for you and your employees? And if they have that understanding, that's a good first step.
Okay.
And then secondly, because there's a lot of education out there in the world today, and so we should have access to that level of knowledge. The second is, yeah, what do you think the world will look like if this is a public company? Like
Interesting.
when and I don't expect people to going back to the finance thing, I don't expect people to go deep on what does the revenue model look like and how is the flow of proceeds and all those things. It's not that important. It's like, but what it is important is okay, why does this need to exist? And why will it be really big? And what does the world look like? This is a public company. And you can envision it, you get excited by it, you have conviction in what you're saying. And that is what drives me to believe that yes, okay, you think this can be a public company. And so it's the intellectual rigor of knowing, okay, this is what I'm signing up for. This is how venture capital works. And then it's also the true belief that I'm taking this money because I want to change the world. I want to create a foundational company and it will look like this. And if it looks like this, then ultimately we'll have a successful business.
No, interesting. No, I agree. I think that makes a lot of sense. So I'm curious to get your thoughts on no code because you or low code because you invest in developer tools. Do you think that's the future? Bit of a hybrid model between what we have kind of now and that, or what's your thoughts on that?
Yeah, it's a pretty interesting question because uh, low code and no code buzzwords been around for a long time, right?
Totally.
You kind of if you go even into the public market, there's Pega systems and big companies that have been quote unquote no code, low code for decades. Um, and then you have the next generation of businesses like Airtable, where we're privileged to be partners with Howie, um, and it continues to ride the wave and accelerate kind of every year. And so, to answer your question directly, there is going to be a universe with both of them, and that's
Sure.
not a hedge, and it's actually what I believe is a increasing of the total addressable market. If you look at the number of developers in the world, uh, it's growing, but it's not growing as fast as the number of software companies.
Right.
And so, which is why supply and demand happens, which is why the average salary of developers has continued to accelerate every year for the past decade. And if that continues to happen, there is a ceiling of which the capital markets will allow developers to get paid and people to get paid for X, Y, and Z unit of work. And if that's true, the only outcome can be a software platform that allows non-technical people to produce some level of technical output, which has to be no code, low code. Because otherwise, you just continue to have this increasing of salary from developers. And actually, what I actually think will happen is just both. I think the production of software will continue to accelerate way faster than the number of people, and so low code, no code will accelerate in ways which I think we can't even conceive to think about. But also, developers will continue to be one of the most popular jobs and popular career routes for many young people in school today.
No, I think that's actually really insightful, and I 100% agree with you. I just being in tech for as a couple decades now myself. It's funny how the trends have come and gone a few times, and what they're called is just different. And like you said, no code, low code's been around for decades, but they've had different names throughout the different decades, right? And I agree with you. I think they'll be both, right? And it's interesting to get your perspective on that. But I'm curious, because you guys have been investing globally for a very long time now, and you still are, how has the pandemic changed the state of venture capital? And what are your thoughts? Like, it's from an outside perspective, it seems to me there's a ton of money floating around and investments happening kind of all over the place. But is that a true statement, or what are your thoughts on the state of venture capital these days?
All of that is true. So there's more dry powder than the history of venture capital,
Okay.
which is driven by low interest rates and needing to find yield from large LPs. And so money is flowing into venture capital, and the pandemic, uh, for some reason or another, because there's always been interesting companies all over the world, has
Right.
meant that a lot of our peers have said, "Oh, there are companies outside of the Bay Area," which we we've been investing outside the Bay Area for decades. But the uh, and so money is going everywhere, and the pandemic has allowed people to do that from the comfort of their home. We and you see that in the output of the dollars. You see last year was the largest year in funding in LATAM in the history of time, and that has also been true in the US. It was also true in Europe, and so the the people who are always like this city's better than that city, or San Francisco is the most important place in the world, or whatever it is, it's very much a zero sum game. The we're in a global technology world. The internet is global. Pretty much wherever you are in the world, you can have access to it, and um, there are great entrepreneurs everywhere.
Right.
And so the pandemic has accelerated it, which is clear to happen. Having said that, uh, you're also seeing the rise of uh, traditional Silicon Valley firms open offices in different places. You have people opening offices in London, people opening offices in New York. There's talk of Miami, there's talk of lots of different cities. And so while the pandemic accelerated the flow of capital to different regions, what it really did, I think, was make people look around and
Okay.
ultimately decide, yes, you still need people on the ground. Yes, you still need human connection, but it's not a zero sum game. And while San Francisco will and is the center of the world of technology, the world of technology is accelerating way faster than anyone could ever think. And again, going back to our previous conversation, that it's not a shock that dollars are going all over the world when the growth of the market is way accelerating the growth of dollars.
Yeah. Interesting.
I've
No,
had
I
sorry to interrupt. I've had
no,
this
go
thought in the
keep going.
past about the cloud vendors. So if
Yeah.
you put together the AWS, GCP, and Azure's annual bookings growth, so in the billions of dollars,
Yeah.
um, it doesn't. Uh, the dry powder in the US, let's take the US just for ease of math, doesn't really equate to the top cloud vendors' booking growth. So you have AWS, GCP, Azure, and you maybe even throw Snowflake in there. They're adding billions of dollars a year. And maybe
Right.
we have $100 billion of dry powder if you include a lot of the private equity firms. And so it's actually still de minimis. The issue is, you still need to invest in foundational companies, and that's why prices are going up. But I actually believe that the growth of the software market outstrips the growth of the private market dollars. Um, and the reason people have gone elsewhere is because they want to put those dollars to work in a more unified fashion at hopefully a lower, more rational price, although that's not really happening. So,
Interesting. Okay. Uh, okay. No, but okay, then why do you say that? Just out of and why is that your opinion? Just out of curiosity then.
well, in case it's not abundantly obvious, I'm a long term believer in the role of technology in the world. And I there are still billions and billions of dollars of uh, compute locked in on premise. So we're very early in the cloud days,
Sure.
and that's accelerating. It's not decelerating in any way. It does not. It's not to talk about the role of Web3 in the world. And so, because of that, uh, there's more and more dollars chasing a bigger and bigger opportunity. And so, while prices have gone up, while dollars have become more diverse and dispersed, um, I think we're still in early days. Like, I really do.
No, I 100% agree with you. I think we're just at the start of kind of the tech rush, or and that's going to hit every industry and accelerate like crazy in the industries it's already in, right?
Yeah, I mean, it just go to any major city in LATAM or go to any major city in Europe and then go into a business and say what technology you're using. And a lot of people are still on old Windows operating systems, or a lot of people are still using on-premise technology. There are data centers all over the world in people's offices still. Um, I'm sure we've all been in a bar and seen someone using Oracle's Micros instead of Toast. Like we are really early.
No, no, I 100% agree. So I'm curious, what advice or what is CRV and or yourself looking for when companies want to pitch you guys to actually get some investment?
Going full circle to the rowing thing, I uh, I look for voracious hunger, like I really do, like a
Okay.
a big will to win, someone who goes to sleep thinking about this, wakes up thinking about this, because startups are hard, and it's
Yeah.
not linear. We know it's not linear, but we have a portfolio approach. We make multiple investments in a fund. The founders have typically one company that they're running at any one time, sometimes more than one, but mostly one. And so we and I look for the deep hunger and will to win. Um, and then on top of that, why do you have a unique point of view? Like what was your unique insight in why this your approach or this company or whatever it is going to be foundational? Um, And then, lastly, it's like, how does your team work together? And yes, we care about what you've done before, but really, it's how are you working together? How do you communicate? How are you delineating roles? What are you thinking about milestones? Who's in charge of milestones? The true accountability of that in the operations, and those are kind of things we look for. And there's I have to. I keep people get asking me how many companies I've spoken to in my life. And it's probably more than 10,000, and have made around 20 investments for ease of math. So
Got
it
it.
is a fraction of a fraction, the number of times we make investments. Uh, and, and this sometimes that's my own fault, sometimes it's the fault of the market, but you call it it's a very, very small number. And so it's that really like that magic sauce. And when it happens, it is like one of the best parts about this job that you fall in love with the vision, you fall in love with people's hunger, and you just have to figure out a way to work with these people. And so that's something that gets me just really, really excited, and something that everyone at CRV gets excited about because we think that that hunger, that willingness to work together, that unique insight is the early sparks of what could be a foundational company.
I think that's really good advice. What are your thoughts on people getting to know, say, yourself or other investors at CRV? Should we build a relationship with you first before we pitch you? Are you fine with the cold pitches or the warm introductions? What do you would recommend?
Hopefully, it's obvious from my background that I'm very comfortable with cold pitches.
Yeah, I figured.
Uh, I'd be a bit of a hypocrite if it wasn't. Also, if someone wants to do a warm intro, I'm happy to do that too. But uh, definitely am comfortable with cold pitches. Um, I think this is an interesting question because there was a period over call it the last 18, 24 months, which rounds were happening very quickly.
Yep.
And this is not a nuanced point of view, but I'm going to say it anyway.
Okay.
It caused some shotgun marriages, and some people are happy about it, some people are not. Um, and a an investment is actually much harder to get out of than a wedding. More people can get divorced in the US than they can get out of a assigned uh, docs for an investment round. And so you would, I don't know all the founders in the world, but you would probably not get married on 2 meetings over 48 hours. Um,
Fair enough.
and while I guess it's easier to reference a VC than it is easier to reference a potential partner, um, it's irrational to me when rounds get done in 48 hours.
Yeah.
If you believe you're going to be running a foundational company, and if you believe that that's going to take time, why are you rushing into a process when it could take a very long time to build a business? And you should get to know these people. You should. And some people don't want to meet in person. I understand the hesitancy around COVID, but you should just spend time with people, figuring out what they like, what they don't like, what motivates them, why they're doing this on both sides, because it really is a partnership. There are different stages of investments, and then there are but at the earliest stages, it really is a partnership. We partner with our founders. We don't invest in them. We work with them, and that really matters. And so, you know, I, uh, I mean, the Jeeves example is a great example. I knew the team probably 9 months before we made the investment, and we'd spent multiple times together. I'd flown all over the world to spend time with them, and that was really super important to us and to them. And in a universe where uh, there's a lot of capital and you need to differentiate in different ways, you should know who you're working with. And I tell this to any company who I'm trying to have the privilege of working with. Call any one of the founders I've backed on my LinkedIn. Call any of them, message any of them, and I'm happy to introduce you. I'm happy for you to call them, whatever it is, because uh, you should know who you're working with because it's very, very hard to get out of it.
No, I think that's actually really good advice. I'm curious then, how did you meet them and what advice do you give to people that want to start that relationship with you or other partners? Because especially if they're coming from a cold email, like what are you expecting in that first kind of intro?
So I met the Jeeves team. I sent them a cold email to the hello@tryjeeves.com email.
Oh, wow.
Uh,
So you did it.
I did it. Yeah. I mean,
Fascinating.
you can see if you people go on the CRV website, look at the blog post I wrote about the Series B. I emailed the hello@tryjeeves.com like a week after I started at CRV.
Amazing.
And uh, and that was for the Series A that was happening that I was late to because I just started at CRV, and then we let the B. With me, email me, james@crv.com. Most VC firms are first name at firmsname.com. And so happy to receive cold emails. It should be as simple as this is who I am, this is what I'm doing, here's any traction I have, here's any numbers or whatever the KPIs are. What are you raising? And here's a deck, and off you go. That's what I would recommend. And I read every email that gets sent to me. Sometimes I'm a little slow in responding, but I will read every email that people send me, and that I think is true of most of my peers.
No, I think that's actually really good advice, but sadly, we're out of time. So how about we close the show with mentioning where people can get more information about yourself, CRV, and the companies you invested in, and any other links you want to mention?
Yeah, everyone can get the information on our website, which is crv.com, where we have all of our lovely team members and a lot of the founders we've had privileged to back. You can see some of our backstory, and we think that we've done a nice job of telling people kind of who we are and why we do this. And so that's the best place to get information on us and all the founders we work with.
Very cool. Well, James, I really appreciate you taking the time out of your day to be on the show, and I look forward to keeping in touch with you and have a good rest of your day.
Yeah, thank you. You too.
Thank you. Okay, bye.
Bye.
Thanks for listening. Please visit our website at buildingthefutureshow.com to join the free community, sign up for our newsletter, or to sponsor the show. The music is done by Electric Mantra. You can check him out at electricmantra.com. and keep building the future.